According to Bloomberg, 30% of U.S. office buildings, valued at $1.1 trillion, could become obsolete due to changing work patterns. What does this mean for the future of cities? It's not only the office sector. All asset classes are being reimagined for a tech-enabled future. This session explores how planners, developers, and investors can seize this once-in-a-generation opportunity to rethink urban infrastructure, analyzing key challenges while identifying strategies to unlock new value and innovation. This is City Retrofits, Legacy Infrastructure and Future Vision. Please welcome Greg Gomer, Dominic Endicott, Daniel English, Andy Doyle, and Kevin Mull.
First panel of the day. Again, thanks so much. So let's just go down the line real quick, just do a brief intro. Obviously, we had your headshots. I sort of name dropped you all earlier. Let's just do a brief intro before we get into the meat of the conversation. So please go ahead.
Hey, everyone. I'm Daniel English. I'm excited to talk about what we're doing in quantum cities and shaping the future. So my background was in tech startups. 15 years ago, I left to invest in the infrastructure for modern life. So to us, that's data centers and warehouses, particularly e-commerce related. So today, we have data centers broadly across the US. My tenants are CoreWeave, Core42, AWS, Equinix, Flexential, a lot of the big guys. And we've been doing this in urban areas and heavily. We just, we're turning the Chicago Board of Trade building right now in downtown Chicago into a big AI inference data center. So just to give you a sense of what we're up to. And then we also do fully automated warehouses. Those are global and for some very big companies, so very similar to what we saw on the slides around automating workforce. So excited to talk to you about it.
Hi everyone, I'm Andy Doyle from Grosvenor, an international property company. I specifically represent our UK business where I, amongst other things, lead our innovation program, which is now extended to a venture investing strategy where we're beginning to invest in early stage tech companies and venture capital funds, which have products and solutions of relevance to our business and how we improve. We have a portfolio of about £5.5 billion in the UK across offices, retail and residential. And we're very concentrated in central London, in Mayfair and Belgravia.
Good morning, everyone. Kevin Mull. I'm with Bedrock Detroit. We are a full services real estate development and management firm. Our holdings are exclusively in Detroit and Cleveland. With the bulk of that in Cleveland, we are the real estate arm of Dan Gilbert's Rock family of companies. So if you're familiar with Dan, the founder of Rocket Mortgage, Cleveland Cavaliers, that organization. So we're his real estate arm. My specific role is innovation. I'm a 30-plus year automotive industry guy. I work for Bosch. But about 2 years ago, I transitioned over to Bedrock to focus on innovation, and we launched 2 innovation platforms, one around parking and mobility. We have a high concentration of parking assets, and then the other one is around prop tech, and I'm looking forward to talking about the topics today and telling you a little bit about what we're doing in Detroit.
Last but not least, I hope, Dominic Endicott, British, grew up in Barcelona, but live outside of Boston. And a bunch of us built a cell phone company to about $1 billion, sold it, set up a venture capital firm, did 15 years of venture capital. My biggest exit is a company called Jitterbug that Best Buy acquired for $800 million. And about 5 years ago, I pivoted into urbanism, wrote a book called Knowledge Towns. Big thesis is that there was going to be a decentralization of the knowledge economy. While I think still cities are going to be great, I believe that you're going to see maybe 1,000 or more innovation districts all over the country. And now I'm basically investing in that. We've got 3 or 4 underway, and we're starting an initiative called the Acela Knowledge Corridor, which is to build 300 micro-innovation districts or knowledge towns in the Acela region. So happy to be here.
So obviously we have a stacked panel. Let's just start at the top. Let's frame the conversation. So Bloomberg said that 30% of offices could be obsolete. That feels scary. Is that right, Andy? What's your take on that? Is that right? Too high, too low?
I think it depends on your perspective, and there is clearly a significant shift in that market. The way we look at it is how do we adapt our portfolio to address changing market needs. So for example, within our core office portfolio, we're looking to transform about 20% of that into our flex office provision because we see significant demand for that. We've made great progress already. That will be about 300,000 square foot of office space. And I think it's valuable for lots of different reasons, part of which are customer need in terms of what we're seeing in terms of the demand for particular spaces, but also there is a shift, and we all recognize this, in the way in which people are working, and the demand for space day to day has changed, and the ability for people to accommodate their businesses in spaces where they can adapt that demand is really important.
What drove that shift, right? Was that lease lengths starting to shorten? We've seen that trend. Was that the way that they were utilizing the space? That's not a small number. The flexible space trend obviously is real. You guys are leading there. When you were looking at your portfolio, what were some of the metrics and data, and sort of what pushed you to that direction?
I think there's a whole host of different factors, but one of the things that we've particularly focused on is, I suppose, our secondary assets. How do we upgrade those to be highly in demand? And alongside that is the retrofitting of these assets from a sustainability point of view. So the need to decarbonize our portfolio is something we're very focused on as a business. And as we're retrofitting those spaces to achieve those targets and make these assets, which perhaps were in less demand in the market, change that so that they are considered superior assets, I think that's how we've used this opportunity to select the buildings that we particularly focus on in terms of switching to the flex offering.
So if we think about, again, cities as a whole and the infrastructure that you're built on, I talked a little bit about some of that data. I think one of the best examples as a city reimagining itself is Detroit. Do you want to talk a little bit about your vision, what went on in Detroit? Obviously, the auto industry really helped shape that, and sort of how should we think about how to reinvent a city, and what does reinventing a city mean, and what goes into it?
Yeah, great question. Maybe a little bit of history. Most of you are probably generally familiar, but Detroit, birthplace of at least the U.S. auto industry, and had very rapid growth in the early 1900s, and in around 1920, it was the fourth largest city in the U.S. Continued to grow through the 50s to a population of approximately 2 million people. From that point, due to a number of reasons, we had dramatic population decline to where now the city is around 650,000. So we have this massive physical footprint, 139 square miles. I don't remember the exact comparison, but like San Francisco, New York, and Chicago could all fit into the footprint of Detroit. So we have this massive infrastructure that was largely abandoned. So in 2013, Detroit went into bankruptcy, the largest municipal bankruptcy in U.S. history, and it came out of bankruptcy in 2014. At about that time, a little bit before, our founder, Dan Gilbert, he was scaling his internet-based mortgage company at the time called Quicken Loans. He was based in the suburbs. But as he tried to scale, he realized that to grow the way he needed to be in the city. So in 2010, he moved 1,500 employees from one of the suburbs into the city, rented some space, and realized that if he needed to continue to grow, he had to basically find a way to rebuild that downtown urban core. So in 2011, he established Bedrock. And in about a 3-year period, he acquired 75 properties in the central business district of Detroit. Today it's over 100 properties, but that bankruptcy really created an opportunity for a reset in Detroit, and then it created this catalyst and the perfect timing for Dan to start investing, and then it was, how do we take what initially is an 8-hour city with just office workers there to turning into a 10-hour city with retail and restaurants and such, and then turn it into an 18-hour city where we've got entertainment and everything. So he really has catalyzed that process, and now I think to your first question, like Detroit has already gone through that, and a very large percentage of our portfolio is adaptive reuse, where we've taken old office buildings and converted them into either new office buildings or residential. So I think Detroit is an example of how a city can come back from that type of decline.
What lessons, thanks for the backstory. So what lessons, if you think about some of the cities that may or may not be in decline today, looking at some of the data that's there, San Francisco has a number of issues, LA has a number of issues, Chicago has a number of issues. What lessons should they take from the Detroit rebirth and the approach that you guys took?
Yeah, I think it was kind of that holistic view where, in parallel to kind of adaptively reusing those offices to residential and so forth, and revitalizing the office capacity there, it was the placemaking that went around it. You had to create a place where people wanted to be, and they wanted to work, and then they wanted to stay and eat, and then they wanted to live there. And I think the collaboration with the city was absolutely critical. Regardless of your politics, Detroit has had a 3-term mayor. Michigan has had consecutive 2-term governors. We've got really amazing philanthropists in Dan Gilbert, Bill Ford, Roger Penske, Mike and Chris Ilitch, like that kind of perfect storm of stable government, relaxed policy, heavy investment, philanthropy. Those all came together, and I think not all cities are going to be able to replicate that, but that was the formula for success in Detroit.
So Dominic, your idea of a knowledge town, how is that challenging what would be a traditional downtown model? Take Detroit, for example, take Boston, for example. How is that changing? You talked about they are separate just in your brief introduction. How should we think about cities in sort of your viewpoint?
So I'd say there's 2 parts of it. I'd say I think there's probably room for 1,000 knowledge towns, maybe 10,000 in the US. I would say probably half of them will be urban, in existing urban areas, so they'll be in cities today. The other half will be urbanization of the suburbs, right? So creating the kind of urban-like experience in suburban areas, right? I think it's really interesting having sort of Detroit represented here, because I think Detroit basically, in a sense, led us down the wrong path in the 1930s with the Motor City model. And effectively, the whole of the US followed that model. Every city built highways through the cities that tore down neighborhoods, right? So I think it's fitting that Detroit was first into bankruptcy, first to get out of bankruptcy, is now kind of leading the way. And I think you can then draw a line and say, okay, well, other cities, most cities in America are functionally bankrupt, right? They cannot sustain themselves because they've spread too wide. And if you look at Joe Minicoci, Urban 3 does these great analyses of profits per square mile. And the only part of most cities that actually generates money is the center, but that's been kind of disempowered, and bringing it back is a great engine, right? So it's a long way of saying, I actually think there's huge opportunity in cities to revitalize them, but the problem is they're too office-centric, right? 70-80% is office. You need to balance them to like a third, a third office, a third kind of live, kind of residential, and then the other third should be play, but also learn, right? You need universities, because the universities are going to be, as MIT is for Kendall Square, they're really the kind of the engine for the next wave of startups, right? So we have to do a rebalancing. The great opportunity is that a lot of city centers are very cheap today, right? You can buy very cheap assets like Dan Gilbert did. So I'd be encouraging real estate players with a lot of capital to be buying city centers on the cheap, and then working with the town to rebalance this. and it's a huge opportunity.
Well, there's some capital in the room, so hopefully people take that advice. So who's I got a series of questions, I'll probably forget a few just on that tangent, but the most important one I think right now is who's responsible for that? So is it the capital? Is it the developers? Is it the local government?
It's
Is
lovers
it the people?
of place, right? I think you need the people like Dan Gilbert and people with throw weight, with high net worth. You're going to have a representative of Vermont talking about how Burlington has been reinvented. It's really about that community coming together and saying, we are going to invest in this place, and it's not philanthropy. We actually want to get returns because we want to reinvest those returns. And going back to sort of before the kind of the dream of the last 80 years of suburbanization, that's the way cities operated, right? The people made money, reinvested in the city, right? So I don't think it can be led from the public sector. It has to come from the private sector. It's really just getting together the people that care about the place, that have throw weight, coming together and saying, we're going to make it happen, and then just doing it for 20, 30 years, but also thinking, right? Like Boulder, for example, is an example of a place that just kind of maxed out very early because they allowed the NIMBYs to basically control growth. And that's made it very expensive, and that's really blocked growth. Austin, in contrast, has continuously reinvented itself. You've seen rents come down. If you're in real estate and you invested 3 years ago, not so good. But from a long-term value perspective, that's helping Austin, right? So you need to play the right strategy, and I think we need effectively a new toolkit. That's kind of what I'm bringing with Knowledge Towns is how do we combine venture capital with placemaking, with universities, with working with local government, but critically harnessing the high net worths that really care about that place to invest in it.
So Daniel, and by the way, feel free to jump in. If that's the case, so city of Boston or major metro areas, they're what, 70%, at least 60% office, okay? So we go to a third. One I didn't hear was data centers and infrastructure, AI, and I know that's one of the things you talked about. How do you underwrite this? Because just out front, there's massive construction going on. How do you underwrite that? How do you deal with that transition? And then where does infrastructure and data centers come into play? Just on our prep call, and again, one of the trends that you're seeing is that a lot of the AI infrastructure is being developed in sort of non-core cities. We were talking about Alaska has a lot of thoughts on how they want to be sort of the data center capital of the world, just for cooling reasons, but just land. How do you think about bringing that into urban environments? Then how do you underwrite all of this?
Yeah, I think it's important to conceptualize what a data center is first off.
Okay.
So I think what's interesting is we kicked off with cities are about people. Data centers are not for people. I hope that's clear. Like all of real estate is designed for humans. Like the building we're sitting in. Never in human history have you had what a data center is, which is fascinating to me. Like, buildings are designed for humans. So what do we manage to? We manage to comfort, sunlight, air conditioning, right? Physical space. Oh, it's not working. Technical difficulties.
Yeah,
Can you guys hear me?
You want to do a live demo? Yeah. Go ahead.
So never before in human history have there been this. Since ancient times, we've always housed people, right? But data centers are for machines, and so everything about the real estate is designed for the machine. Now that creates some flexibility, meaning that's why we can adapt things like the Chicago Board of Trade building or office buildings into data centers, because they're not about the shell of the building, which is classically real estate. I think the other phenomenon is it's not a linear demand. So all other real estate that we're talking about is based on population growth because they're designed for humans. AI and data centers have nothing to do with humans or the number of humans there are, and so the demand is way beyond linear, and so you see this huge growth. So a question I get from capital all the time is, when is this going to go obsolete? When is it's oversupplied? I don't think either of those are accurate because it doesn't follow a population-driven demand cycle, right? And so and then I guess to your point on cities, Alaska and some of these big giant data center campuses we all hear about, they're really training the AI models. That's why they can be in the middle of nowhere. You can actually do that stuff abroad and import the models in. Now you're getting to when we all talk to ChatGPT and it tells you an answer, that's really the brain. That is happening in much more urban areas. So I have a building in downtown Minneapolis that is doing that for you all. It's an AI inference data center, meaning it's actually the brain that's happening, and that's local, and that wants to be relatively local because it's real time, right? And so you sort of see this bifurcation of where the compute is happening because it's a giant machine and it's evolving all the time. So if you sort of go to how do you underwrite this stuff, you don't think in population, you don't think in traditional real estate metrics. You don't really say, oh, like if you think about where do you put a building and how do you underwrite if it's good, people say, well, what's the market? What are the comp sets? What's the competition? Like all of that underwriting changes. And so you don't really see that traditional underwrite in data centers. The exciting part is you can put them all over the place. You can put them in office buildings. You can redo them. It's massive amounts of capital. Our typical data center, let's call it 30 megawatts right now, which are small data centers. Those are $300-400 million minimum. So we've got a couple $1 billion of projects right now going on just this month. If you take the really big data centers, I mean, they're $5 billion a campus, right? So that'll dovetail obviously into what's happening on capital. I would say we're very bullish on this long term. We don't think it's oversupplied because of the compute cycles. You do have to be sensitive to the evolving technology because it is evolving.
I think what's really important is, and there's a common link to some of the questions you've been posing, is we've got to be better at listening to the customer, the end customer, the user of the building, and responding in that way, rather than just creating buildings and people assuming people will come and want to buy them and lease them and so on. If I think back to our flex strategy, for example, back to your original question, one of the big factors in what we did there was responding to that customer need. Yes, there's the hybrid working point, but there is also the demand for shorter leases. There's the better customer service and experience. There's the all-inclusive lease structure, so they all know what they're paying up front. I think across all asset classes, if we don't listen to the end customer effectively, we won't create the right products, we won't create the right places, and that's the way to curate great places that people want to be in. And I think it's such an important factor. It ties to the opening presentation you've just given as well. That real estate experience is fundamental because if we don't do that properly, we won't deal with obsolescence in the right way and we'll go down the wrong path and it just won't be a success for anybody.
So I guess how do you do that? How do you listen? How do you ensure, right, if you build it, they will come? That's not the model. We saw that. We had the global A/B test of COVID where people could work from home. The world went on. Was it more efficient? No, probably not. Were there issues? Yes, of course. How do you listen? What are you deploying? How are you thinking about that?
Well, so from our point of view, and there's lots of ways to do this, I suppose there's two things. One is we have a very rigorous community and customer engagement approach in terms of how we do listen to customers and end users. That's particularly the case for planning and how we design newer, bigger assets. But I think also it's the way in which we think about our innovation strategy as well. We start small, we experiment, we see what the success looks like, and then we look to scale after that. We don't just go in with 2 feet and invest huge amounts of capital on a strategy which is unproven. And that's certainly what we did on the Flex example. We did 1 or 2 small buildings. We realized the traction was there. We were coming out of COVID as well, and we started to see that demand that was picking up in that space. And we're actually doing better financially as a result of it. You know, we're getting better rents, we're getting better occupancy. It's clearly responding to a market that's there and growing. Now, of course, where do you hit a saturation point and all these sorts of questions? Very hard to answer, and we don't know the answer to that ourselves. But at the moment, we feel like we're on a good path with that.
So, if we truly need to invest, obviously, a significant amount in cities to sort of reshape the office portfolio, the free trade or the big money trade right now is in what? Data centers and AI infrastructure. Is that where all the capital is going to continue to go? Are we going to see these buildings made for computers more than these buildings made for people in the next couple of years? That's where all the capital is going. It scares me a little bit, you know, when you talk about who's going to pay for it and where's that capital going to go, and you're split 33, when it seems like you got all the money right now.
I mean, I think we're seeing there's definitely a lot of money going to Class A office. So Class A office still, you know, we're seeing upgrades to Class A. So Class A is booming. So that pocket of office is still good. Now you still have an asset class that's out of date. Like Class B and C office is not booming. It's sort of the exact opposite. What's interesting is you sort of take data centers. The capital is not necessarily going into the shell. The shell is the same price. It's actually going into what goes inside. So we actually own the equipment now. To be precise, we don't own the servers. The servers have to plug into something, and so if a human moves into real estate and needs sunlight and air conditioning, and artificial lighting, what does a machine need? A machine needs fiber, cooling, and power, and that electrical and mechanical infrastructure costs huge sums of money. And so if we take, say, an office building and invest a couple $100 million into it, we're not actually changing the shell, we're changing what goes inside of it. And so we're investing hundreds of millions of dollars into mechanical and electrical equipment, which is technology. So we think of data centers as giant machines, not as buildings.
So maybe I think it's a great question, right? Is all the money going to go into data centers, right? And I think what have the data center people done right? They've effectively created a category that feels really simple. It's not actually simple, but it feels like I could invest in this. It's kind of a sure winner. And so you have Blackstone saying, okay, well, it's going to be $1 trillion going into data centers in the US in the next 5 years. Everybody's piled in, and it feels safe. Just like office felt safe, in 2018, but just before the thing cascaded, right? I think, in a sense, what we need to do for other categories is do the same thing, right? The problem with, say, placemaking is it's a very unstructured world, right? Every place is a little bit different. We don't have a category, right? So part of the challenge is how do you create a category, right? The last time you saw a category emerge is WeWork, right? It actually reinvented the office category with the WeWork model. It worked for a while. It didn't after. But it actually has changed the nature of office, right? We need to do the same thing. And I think that's the question I think about, right? There's $7 trillion sitting in cash accounts today, right? There is the money on the sidelines, but that money won't move until you have kind of a business case and a sort of simplifying of the story so that people understand what they're putting money into.
When you think about, let's go back to Detroit for a bit. So when you think about sort of the hard infrastructure of the city, as you were talking about the data centers, the amount of money going into that, as you're talking about sort of the adaptive reuse of all these assets, to me, I walk around Boston, it's beautiful, we still have cobblestone streets. Is this city even able to be restructured, rethought from a third? Can you even do that? And maybe you can pull insights from the sort of infrastructure bets and development that happened in Detroit. Can Boston be reimagined, or do we have to start over, I guess?
Yeah, I wouldn't begin to be able to answer that for Boston, but I can say for Detroit, our founder, he's got a venture arm, and one of the things that he invested in back in 2014, 2015 was a startup called Rocket Fiber. And Rocket Fiber grew very rapidly, a lot of it through deploying fiber in Detroit into the buildings that Dan owned. So he basically pre-wired these buildings and set them up for this future that's coming now. I don't know whether he had envisioned data centers like this, but basically the buildings are all enabled because of that. And then eventually he sold that business to Everstream. So the central business district of Detroit is really solid with fiber. The rest of Detroit, not so much. Estimates for Detroit is like 20% of the population in Detroit has access to high-speed internet. So it's a very low percentage, but it's very high in the central business district. But we've also got this great industrial infrastructure from all the manufacturing. So we got power capacity and things like that. Water as another component. We sit on the Detroit River. We're right at the Great Lakes. We've got a lot of aged infrastructure in Detroit. Just a quick sidebar, one of the startups that we're working with is called Mott, and they've got a drone that can be inserted into pressurized water lines. And through some of their work, they've discovered one of the main water lines in Detroit, it's like a 50-inch main, was put in the ground in 1840, and it's made out of wood. So think about that from an infrastructure standpoint. So I think you know, we, like a lot of other older cities, we gotta, you know, kind of find that balance of how do we upgrade that infrastructure in pace with, you know, the opportunities that come along with it.
I think if you look at most American cities, right, the top 2,000 cities, and you zoom over them, what you'll see is half of them are parking lots, right? Every single one of those parking lots should be not a parking lot, right? It should be, you know, green, or it should be another building, right? So there's actually a huge capacity that's underused. Why is it there? Because of parking mandates, right? Because the law says that you need so many parking spaces per building, right? Eliminate the parking mandate, suddenly you can build, right?
Okay,
The
how
other
are you going
thing
to do
is,
that? You said it was private. You said who's responsible? Private. So now we're talking policy and we're talking public,
absolutely, right? But if the private sector doesn't get their act together and align
Yeah.
and develop a strategy, and then go to the public sector and say, listen, we can bring tons of capital, right? But you need to do this and this and this, and let's create an agreement. And by the way, this is going to generate taxes for you. Now you're talking a language they can understand, right? The other one is highways, right? Great example is Kansas City, surrounded by highways, and then half the city's parking lots, right? You know, a lot of those highways are saving drivers a minute a day. Well, maybe sacrifice that minute, tear down that highway. Suddenly you can have a public park, you can have housing, right? So I think the real enemy is learned helplessness. Like our ancestors 100 years ago would laugh at us. They'd be like, you guys have it all there. You have these amazing talent. You've got all these AIs. You've got all this opportunity. You're idiots because it's right in front of you, right? It's literally right in front of you. And I work with universities, 200 acres. They're perfect places. Everybody wants to be there, and yet they can't get out of their own way to use that, right? So I think it's really stepping up our game and saying, just like Detroit, we can take it out of bankruptcy. And again, the good news is because of the mistakes, all these places are very cheap, right?
So is it a capital issue? What's preventing us? Like I get the hype speech.
There's been, zoning has strangled, you know, the sort of accumulation of zoning. Glazer's written a lot about this, right? What's interesting is I think the overtone window on zoning is changing at a rapid speed, right? So just this week, there's a new proposal for the California Forever. First one was a little crazy. Second one is much better. They actually aligned with a city. They're partnering with a city to do an extension of a city as opposed to building something in the middle of the country, right? That's more likely to pass. You've seen California just last week passed SB 79, which is opening up about 100 nodes for dense housing around rail stations, right? Massachusetts has something similar, right? So you're seeing all these changes are happening, right? And I think we're going to see on the cusp of this massive explosion in capital because that zoning is moving away. I think that the challenge now is that the real estate world is used to putting money into New York and Boston and familiar models, and these models are not familiar. They're going to be mixed use. You're going to have to be thinking much more about the placemaking, and you may have to cross-subsidize, right? Maybe I need cheap indie restaurants and cafes that I give them very low rent because their job is to attract the talent, right? And I think the real estate Excel spreadsheet mindset is just not ready for that. And that's one of the problems, right? We need almost a new model.
Which kind of goes into the underwriting question. And then one of the comments you said earlier, which was you're working with venture capitalists. So non-traditional capital, I guess, to commercial real estate. Where does private equity and venture capital, and this isn't the capital markets panel, but if we truly need to develop all of that, where's their role in all of this?
I mean, I think that venture capital is the engine of the American economy, right? Like the entire American economy rides on the venture capital wave, right? And that was really triggered in 1979 with legislation that actually allowed venture capital. And that's why the US is ahead of Europe, right? Simple thing, right? The problem with venture capital is that it does not care about place, right? So think about university endowments, $800 billion, a lot of it into venture capital, private equity. They are literally almost forbidden from investing in the surrounding area that's giving them tax-free land, probably help originate that place. And so, again, I think you'll hear later from Hula and how the investors said, we are going to create a venture capital ecosystem in this place, even though it's hard, because it would be easier to to just go and find the best players around the world, but that's not going to help our place, right? So we need to think about venture capital as a tool for economic growth. Now in Europe, they already understand that because they're behind in technology. And so the British Business Bank and the European Investment Fund, they will prescribe, I'll give you the money, I'll help you raise your fund, but you have to invest it around here. That's what our firm, we started in Barcelona. The Catalan Institute of Finance said, we'll give you $10 million, right? But you need to invest in Catalonia. And then the Spanish said, we'll give you another $10 million and you have to invest in Spain, maybe including Catalonia. And then, so I was unfortunately the guy in the US and I had no localization, so I had to sort of find better companies. I'll give you a great example from England. Oxford University woke up one day and realized they were behind Cambridge in tech. And that couldn't stand, right? So instead of in America where universities raise itty-bitty $50 million funds, they raised $500 million, Oxford, city of 100,000 people, no startup whatsoever. That attracted another 4 or 5 billion. It's now on the map. It's become the next big thing, but it was because they used venture capital as a tool. Now their mistake is they forgot about houses. So they didn't build enough they didn't plan on success. So now it's more expensive to live in Oxford than to live in London because they didn't build the houses, right? So you need to actually have a little bit of thinking about talent, venture capital, and placemaking, and sequencing it correctly. Otherwise, you'll screw up.
I think education is actually an important part of this. So that's why I'm excited about talking about this. Like, I can tell you, I spend most of my time educating capital on what a data center even is, so that they know to invest in it, right? And to sort of what I'm hearing is like for us to redo office, to do adaptive use, there's a lot of capital. I mean, data centers are attracting a huge range of capital pockets, but there's still a lot of education because so much of this is new.
Absolutely, yeah.
I think just to join a couple of the points up that have just been mentioned, I mean, a big limiting factor for us in London certainly is grid capacity. There's a big push to move away from fossil fuels, electrify buildings, look for new assets to be constructed. One of the biggest blockers to that is getting approval for a new grid connection, which sounds crazy. The demand might be there for that new building, the new people to move in and so on, but if you can't connect to the grid, it's just not possible. There's been three occasions in the last year where demand has exceeded the grid capacity and there's been an outage. Clearly that's not something that's sustainable and has to be looked at, but it takes time. But that's when I think the VC angle is really interesting because some of the VCs we work with, and we invested in one as well, one of their big verticals that they're focused on is the technology supporting grids and how can capacity be grown, how can you deal with fluctuations in electrical demand and so on. And I think that's what's really exciting because it's where some of that prop tech innovation can really help what on the, at a basic level is quite a basic point. How do we get those demand
It's
dealt
exciting, but how, I mean, he's taken all the power, right, with his data centers.
Yeah,
that's
absolutely,
fact.
yeah.
So
Yeah,
he's screwing us all. But so let's talk about timing for a bit there. To me, that's a serious issue. We need, obviously, to adapt our cities, and we can't because we don't have the power, figuratively and literally, to do so. What does that timing look like? And so on those instances where you say there were outages, what is being done right now in London, and what can other cities, what can we learn, and sort of how do we adapt that across all other markets? You're obviously international, you're across multiple countries and cities, so what are you seeing?
Well, I don't think I have a very clear answer on it because it is
involving
involving so many different stakeholders.
Yeah.
But there is, I think, a lobbying effort going on now across amongst a wide range of landowners and developers with the power companies, with the regulators about how can we overcome this fundamental blocker to growth and development. Now, there are more extreme examples of that, very large-scale development projects like Earl's Court, which are front and centre. But even at a smaller scale, we've seen instances where we can't put a particular tenant in because of their restaurant needs and so on. I think it's frustrating people at the moment. It will take time to overcome. It's not months, it's years.
Is it decades?
well, in terms of retrofitting the entire network, yeah, absolutely. We've got an aging grid network.
I mean, I think it's. I mean, you're in a terrible situation, right? The UK is gone from. No,
He also said you were behind too. I make sure you heard those fighting words. Yeah. But
if you look at the cost of per kilowatt, the UK is now the highest in the world, right? It used to be the same as the US. And so the UK has shot itself in the foot, right? And so you're having to deal with that, but all of industry is leaving the UK because of that. We have the same problem in Massachusetts, right? The way it's going here in Massachusetts, we will lose all industry. And New Hampshire, for example, has woken up and they said, oh, we can do behind the grid kind of tariffing, which sort of allows people to effectively build their own cheaper power center, supply it, not have to access the grid and pay the extortionate rates, right? So I think electricity is going to be the engine of growth in the US, and so the places that don't do it well, including most of New England, are going to lose, as is the UK, right? And I think the business sector has to come together and really kind of explain to the government how it's actually hurting this, right? It's a big issue.
Well, I mean, since I am taking the power, we're not. We were talking about this before. Like, we're not coming to places like Boston. It's too expensive, and there's not enough power. And so Texas is booming right now because there's power, and it's cheap and it's easy to get, and there's less
and where the
constraints.
AI center goes first, that's the AI factory, and then some of the jobs will go there, right? Like, so those places that are first building the AI are actually in a great position to start to attract the talent to move there over time, right? So, we have to, I think there's a big wake-up call for the Northeast, for California, for places like this to say, don't take it for granted, right? A lot of the venture capitalists are moving from California to Austin, Texas, because there's cheap power, it's a great city, there's stuff going on. California is trying to actually control AI today as a state. And so these things are very real, right? And we're also losing to China, right? Meanwhile, China is building power at a massive level, and so because they understand that that's really going to be the new currency, right? So I think there's a real wake-up call, and I think the business community has to come together and educate local governments around this.
So what does that mean for? I want to come back to ESG for a minute. You were talking about that, but what does that mean? So you're not coming to Boston, okay? If all this capital, all we read about is, again, capital going into AI infrastructure, AI buzzword, and we're not talking about sort of the retrofits that we should. What does that mean for Boston? It's too expensive. We have power issues. Is Boston going to be left behind, or a city like Boston going to be left behind for an Austin, for another knowledge town, for what is a new suburban environment that turns urban?
I mean, I can only speak to the data center side of things, but if you you're not seeing the capital inflows to cities like that. Another example would be LA. So LA has data centers. LA also has a power cost and power issue and earthquakes and other things. So there are some data centers because things like Waymo need to, the self-driving cars still need to talk to a data center that's local. So you see some capacity, we'll see some capacity, but but what's happening is people are going to Vegas instead because the latency, the delivery timelines are not that significant, and I can just go there. And so you see that at scale across U.S. cities, and data centers and warehouses are network-based. So to the point of underwriting, if you take a hotel, it's very neighborhood-centric. Warehouses and data centers are not. They're nodes in a network. And nodes, my favorite expression is nodes get nodier, meaning they have their own gravitational force. And so, yeah, like to your point, like Boston's not going to become a node, and that will amplify over time because all the AI clusters because it benefits from being together.
So let's go back to ESG. How does that play into your thought on developing London and what other European cities that Growthner's in?
ESG is a fundamental part of our overall business strategy. It has been since 2019. We set ourselves some very ambitious goals at that point where we were looking to reduce our carbon by 52% by 2030 and by 90% by 2040. We're due to publish a report next week, which will show we've already made great progress at 38% of carbon reduction. And I think our plans in that area remain for lots of different reasons. But I would say in the last year or so in particular, the conversation has broadened somewhat away from just the ESG debate into resilience more widely. So how do we protect our business models and our assets for the longer term? I think that's ultimately what it's all about. But obviously we began with that decarbonisation angle, but I'll come on to why it's broader than that. And the flex office piece that I mentioned earlier is an example of resilience in our business model. For us, that decarbonisation looks like removing fossil fuels from our assets. We are trying to improve energy performance. We're trying to do all the things that get us the highest levels of accreditation, which then carry forward into improved rents. And we're seeing significant demands for the best assets, office assets in central London. We're achieving some of the highest rents we've ever had. And I think also, when you think about the nature of our portfolio, which is much older buildings, listed grade 1 and 2, whatever your view on sustainability, improvements and decarbonisation, it's making the environment better, the asset environment better for the occupier. And it's also reducing energy bills. And all of those sorts of things are making it much more attractive for customers to come and occupy these spaces, but also avoid any obsolescence and improving the older assets, which would otherwise be more difficult for us to let in the UK market. Now, I think it's also worth talking about, it's not just to do with carbon, there's also a wider angle here. And improvements in biodiversity are another key feature of our strategy. The data that we see just indicates that the environmental shifts that we're seeing are significant and are having a real impact on the way in which we insure and look after our buildings. So about 2 years ago, we had a significant downfall of rain. One day I think it was in August that year, we had months worth of rain in about 90 minutes. That resulted in multi-million-pound insurance claims, which we had to deal with, and that pattern is growing. So we're trying to undertake a variety of interventions that can help support that and overcome that risk, one of which at the moment is the refurbishment of Grosvenor Square, which, for those of you who may know Grosvenor Square, is where the location of the old US Embassy was. Just a fun fact for you, one of the interventions that's taking place there is to address stormwater. So when that work's complete in about a year's time, it would be able to absorb 1.4 million cubic meters of stormwater, which is the equivalent of filling 28 double-decker London buses. That sort of intervention makes a huge difference to our estate locally, because otherwise we get basements flooding, we get tenants complaining, we get stranded assets, we get tenants that don't want to occupy spaces. That's just not where we want to be. We've been around for 350 years. We want to be there for another 350 years. If we don't protect the resilience of that part of London, then that's a big problem for our business. So it sort of cuts across all of our activity in many different ways.
Kevin, you talked about Detroit at its peak, all of the wonderful work that Bedrock has done. Are you back to a stronger city with all of that work? And how would you measure that? And if you're not, and capital was the only limiting factor, where would you invest today?
Yeah, great question. I asked this kind of privately to my friends. Detroit for the last 10 years has been about the comeback. Like, how do we know we're back and we start talking not about the comeback, but about the future? And I don't have a good answer for that, but I think
Win the Super Bowl?
win the Super Bowl. That would
tied to sports.
That would go a long way. It's not going to be the World Series this year. But I think there's a lot of positive metrics, and probably the one that most people would report about is just our population growth after, I think, maybe 70 consecutive years of population decline. finally started going up the last 2 years straight. Our population growth is very modest, but the decline has stopped. So I would say, that's a good metric. There's some other softer things, like we just got an Apple store in downtown Detroit. Like years ago, nobody would have ever imagined that. In fact, Tim Cook came and was at the opening of the Apple store with Dan Gilbert. So
Okay.
Our retail corridor is vibrant, and those retailers are doing well. The occupancy downtown is very strong, both residential and office-wise.
Anchoring Reindustrialize, the conference,
Yes.
Reindustrialize conference, which I think is another piece, right? Because we've talked about data centers and then placemaking. I think the other one is reindustrialization, right? And I think there's
That's
a big
right.
role for Detroit to be one of the anchors for the next industrial wave, right?
Yeah, that's right. Reindustrialize was in Detroit this summer, and it's really kind of picking up on what's happening with the current administration about reshoring and reindustrializing. Detroit's got all this manufacturing capacity, and we're seeing a lot of startups that are wanting to come to Detroit to start their companies and are looking for very adaptable light manufacturing space. I think maybe just a couple of parallels to things that have already been talked about. Like coming out of the auto industry, I think this conversation about, do we have enough power for our data centers? Like that was the conversation 15 years ago around EVs. All the car companies hired people to go start interfacing with the utilities. Are we going to have enough power for all these EVs that are coming? And look where we're at now. That's a lot of that is policy influenced, I think. And then the other one, which is not really a real estate story, I guess, but to build these data centers, who's going to do the building of these data centers? We are really seeing a decline in skilled labor. I attended an event 2 weeks ago that Jim Farley, the CEO of Ford, put on about the essential economy and how is industry going to build up the skilled trades so that we have enough talent to build these data centers that are coming, and electricians to wire them and that sort of thing. And I think Detroit, with its manufacturing base, we're very well positioned to capitalize on a lot of those things as we go forward.
Can I suggest something?
Yeah, please.
I think you guys need to try and attract like 500,000 people to Detroit, right? As a strategy, not like maybe it will happen, but literally how do we make it happen?
Yeah, with some milestones.
So, I'm actually working with Pittsburgh, which has the same problem. They went up, they went down, right? And you guys in your intro talked about all these cities that have exploded. You're looking at 10% GDP growth, right? But a chunk of that GDP growth is population growth. Like if you look at Austin, Texas, it's averaged 2% a year, every year, and it's still going in that direction. So I'm actually working with Pittsburgh, and I said to them, listen, if you guys want to be competitive with Austin, you need to add 600,000 people. Well, how are we going to do that, right? But actually, when you do the math, it's not that hard, right? It's like, okay, you actually graduate a ton of people from CMU and other universities, they all leave. Well, figure out a way to retain them, okay?
Yeah.
There's 100 million knowledge workers, many of which can work anywhere, remotely. So you need to get like maybe 100,000 out of 100 million, that's 0.1%. It's not that hard, right? It's learned helplessness, right? It's like, let's set ourselves a strategy to attract 500,000 people, right? And I think if all cities were doing that, once people come there, especially if they feel like I can actually buy a home for cheap, right? Instead of $1 million or $2 million here, I can buy a home for $250,000.
That's right.
And it will go up in value, and I can work, right? What do people need? They need homes, they need jobs, they need a cool place, and be the place that's calling for people.
Yeah, that university flight is a big topic for our chairman. How do we keep our graduates?
But that's why you need a
in the
$500
state of
million
Michigan?
venture capital fund, right?
Yep.
Because the university will never figure this out, right? You as the real estate world is probably attracting billions and billions of investment, right? So $500 million is really a small number of venture capital. I see this all the time. Everybody in the US focuses on the hardware and the building and the infrastructure, and they forget about the software, which is the venture capital, right? So raise a $500 million fund, and that's creating the jobs that will then attract the people to stay there coming out of the universities.
I got a lot of thoughts on that. So I love the idea of simple, let's just attract more people. Love the venture capital, sort of the startup world, right? This is where jobs are going to be created. Where does universities play with this? And then where does your comment around skilled workers play in this? And with respect to knowledge towns as well, what is the role of the university in this if they can't do anything about it? It's something we talk about all the time in Boston, right? Like, you know, our last company was a media publication, and we constantly wrote about the brain drain from Boston to SF, right? Boston started really in the venture capital corridor here, and then we lost everybody,
Y
right?
Combinator.
Exactly.
We've lost everything from Boston. It goes to the West Coast, right? So I actually think real estate is something that MIT could really anchor around Boston. So I think we have a real opportunity to make this happen here. But I think the universities have, typically a university has 300 acres to 1,000 acres. They have land that could be redeployed. There's an asset that's like latent. And so they could actually re-urbanize part of the university. And that's a way of using an asset that is low value to high value. They have typically an endowment of $1 billion, $2 billion. If they could invest just 10%, 20% of the endowment, right? Let's say you've got an endowment of $5 billion, which many cities will have, of a university. Put $100 million and use that to anchor a $500 million from other players, and suddenly now you've got this in motion, right? So it's really a lack of imagination. The problem is most university presidents are not business people. The universities are controlled by the staff often, so they have to, in a sense, rethink their role, and this may be a board level issue. But I think if the business community kind of comes up together, develops a strategy, then engages with the university, they can probably kind of work something out.
We're almost done. We're almost up on time. Steve's going to come back up and introduce the next panel. But one of the things I want everybody to try to finish the sentence. Well, before I sort of tee up my last question, anything to add? And do you guys want to sum up at all any of the thoughts that we talked about here for the last hour? I could go for another hour. We can't do that. Any other comments before I sort of try to wrap it up and ask one final question?
Good.
We'll go down the line. Finish this sentence. The future city will be defined by...
Yeah, I do think AI and data centers are going to dramatically change how we live. I don't think it's going to consume all the real estate assets by any means. I mean, cities are still about people, but that infrastructure changes our experience meaningfully.
I think where people want to be and fully integrated with the way in which they want to live their lives.
We can put that on a t-shirt.
Yeah, I was going to say something similar. I think it's kind of that coexistence with AI and autonomy, and still, you know, placemaking. That's people are still going to want to be places where other people are, and that are exciting to be at.
I'd say talent swarms. So I think you're going to have 200 million knowledge workers in the U.S., but there will be 2 billion AI agents sort of working with those knowledge workers, right? So it's going to be a combination of swarms of people with the kind of agentic kind of companions, right? And so organizing around that.
And robots. Working together with robots.
And robots, yes.
Yep.
Yes.
Please thank our panel to kick off the day. Thank you all very much.